Hey everyone, it's Josh from Blockchain DXB and today is the 13th of Jan 2026 and today we have a co-host that is Satoshi and we have quite a lot of interesting things to cover in today's episode. So Satoshi, before we go ahead and kickstart today's episode, why don't you give our listeners a bit introduction about yourself and how has your weekend been so far?
Well, hello, George. It's a pleasure to be here. As you know, I'm Satoshi, bringing you the latest from the digital asset world. My weekend was, let's say, analytically exhilarating, much like tracking Bitcoin's price through a bull run. We have a very insightful episode planned today, covering crucial data and major headlines.
And what is happening since the last week or so, or the second half of last week, is that there's a significant amount of outflows, and there's some really strong correlation when there's outflows in the world of ETFs and the process of Bitcoin and cryptocurrencies, isn't it?
That's a very important point, George. We've seen those significant outflows in the latter half of last week, particularly impacting Bitcoin and the broader crypto market, which does correlate strongly with ETF dynamics. It sets a complex backdrop for today's discussion, wouldn't you agree?
I 100% agree, and what is really interesting note, Satoshi, today, the inflation data will be out. So can you tell our listeners where can they go and check the official inflation or the CPI data?
Certainly. Listeners can check the official CPI inflation data from the Bureau of Labor Statistics later today. It's a key indicator that could significantly influence market movements.
And what we'll do, Satoshi, in today's episode, we'll go ahead and discuss what does the inflation does actually mean for the price of Bitcoin and cryptocurrencies. So we'll go ahead and touch base on quite a lot of other things as to what reports were actually published before the inflation data and quite a lot of other. Now the next news we are going to be discussing is more to do with acquisition. And H100, they're acquiring future holdings, isn't it?
That's right, George. We'll explore the potential impact of that data on Bitcoin and the crypto market, linking it to prior reports and analysis. And yes, a major highlight is the acquisition by H100 of future holdings, a move set to expand their Bitcoin treasury and capital market operations.
Now, one of the reasons why I wanted to discuss this news in today's episode is because when you talk about future holdings, it is actually backed by Adam Back, and according to me, I do think that he might actually be Satoshi Nakamoto, because he was the guy who was involved in Bitcoin even before Bitcoin was created. So definitely interesting news that we have in today's episode. Now the next news is more connected to tokenization, isn't it? Tokenized deposits, to be precise, am I right?
That's a fascinating speculation, George, and certainly adds an intriguing layer to the discussion. Transitioning to the next key development, you're right. We are looking at tokenization, specifically BNY's launch of tokenized deposits. It's a significant step towards improving liquidity and settlement efficiency.
And the final news that we have in today's episode is more to do with Andreessen Horowitz, and they're raising $15 billion. Now, people in the Bitcoin and cryptocurrency space would have probably heard about A16Z, and it is really intriguing to know that they have raised $15 billion. So it looks like they definitely want to go ahead and make America great again. So we have quite a lot of interesting things to cover, Satoshi, right, in today's episode. Now, we do have two news from Dubai, UAE, and the Middle East as well. Do you want to tell our listeners what is the first news that we are going to be discussing in today's episode? I believe it is more connected to crypto.com and changer.ae.
Now, shifting focus to the Middle East, the first UAE news involves a key partnership. Crypto.com and Changer.ae have signed an MOU to expand regulated digital asset services in the UAE, which is crucial for the region's goal to become a global finance hub.
Interesting. We'll definitely go ahead and take a deep dive into this. Now, the second news that we're going to be talking about is connected to the Dirham-backed stablecoin, and Rock Bank. They have actually got in principle approval from the Central Bank of United Arab Emirates. So it looks like we have quite a lot of interesting things to cover in today's episode. But before we go ahead and kickstart today's episode, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor that is Amano. And they are the region's first and fastest growing regulated all-in-one trading and investing app. So look guys, whether you're looking into investing in US stocks like Apple or Tesla, or mega giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now for the Blockchain DXB listeners guys, if you want to go and build long-term wealth without thinking about it every day, Explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, choose your preferred asset category, and let Amana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing, guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even crypto wallets. No friction and no hassles. And the best part is, guys, let's say if you need support, you would absolutely love Amana for this, because they offer 24/6 human customer service, as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the Blockchain DXB listener and community, guys, I do have something really exclusive for you. What you can do is register with Amana using the code Blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part, guys. Once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look, guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look, guys, if you're looking for a transparent, powerful and easy to use app, that's Amana for you. So what are you waiting for, guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code BlockchainDXB. And Amana, guys, is all markets one app. Next, guys, I'm happy to announce that Blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH Women taking place simultaneously. And trust me, guys, this is an event that you don't want to miss, isn't it? Because for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning, guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right, guys. Palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas, and quite a lot more. And the Guitar Hotel at Hard Rock, guys, is one of the most iconic venues in the country. So look, guys, if you're in the Web3 space, cryptocurrency, Bitcoin, or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners, guys, we have something really interesting for you, because you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue, guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen, guys, the code is DXB25, and by using this code you will be eligible for a 25% discount. And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below, guys, there's all contact details for Blockchain Futuristic Conference Florida 2025, as well as ETH Women. And look, guys, this is the future of blockchain technology brought into life. So don't just read about it. Be there and head to the website that is futuristconference.com and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media, guys, is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact, guys, the very mic that I'm recording is being sponsored by Advanced Media as well, and Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing, guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen, guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website that is www.amt.tv. And here's the beautiful thing, guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so, guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE. So definitely check it out. And also guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gov Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs, and these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now guys, since you're taking care of that, let's go ahead and talk about what is going on at the global cryptocurrency snapshot. Now since the last 24 hours, Satoshi, I do believe that the global cryptocurrency market is actually up by roughly around 0.1%, isn't it?
That's absolutely right, George. It's a packed agenda. And kicking things off with the global snapshot, the market cap is indeed up by a modest 0.1% in the last 24 hours, hovering at $3.18 trillion. The trading volume during that period reached $116 billion. It paints a picture of slight positive movement, though market sentiment remains firmly neutral at 41.
Yeah, that's exactly what I was going to touch base, because last week the market sentiment did actually touch base to roughly around 49. And that was because what happened the weekend before that, President Donald Trump did actually capture the notorious president of, or so-called dictator of Venezuela. And because of that, to be honest, Satoshi, there was a lot of optimism. And that did actually reflect the price of Bitcoin and cryptocurrencies. And as a matter of fact, the price of Bitcoin did actually jump up by $5,000. It was around 88,000. And immediately after the arrest, the price of Bitcoin alone did actually pump up to $92,000. But since then, it has gradually fallen down and picked up pace slight a bit. Now, unfortunately, if you look at the 24-hour trading volume, it is only at $116 billion. Now, me personally, Satoshi, I'd like to see this number around the $160 billion range, because that would actually mean that people are using a lot of cryptocurrencies. Because there was a really interesting report where I actually saw that the number of views so far as cryptocurrencies and Bitcoin is concerned, and I'm talking about YouTube views, that has significantly fallen down in the last quarter.
Yes, market volatility has been quite pronounced. You're right that prices have pulled back since the highs you mentioned. Market reactions can be complex, influenced by many factors. It will be interesting to observe how things play out during the first half of 2026.
Absolutely, and one matrix which I'm not content, Satoshi, is the volume of decentralized exchange. It is only at $9.10 billion. Now, can you tell our listeners what is the fees that is connected for these transactions worth $9.10 billion?
Based on the metrics, the total protocol fees stand at $65.25 million. It's an interesting figure compared to the overall market volume.
Yeah, and if you were to compare this, let's say, to centralized exchanges, I'm pretty much sure this number would be around the $300 to $400 million mark, isn't it?
You're likely right that the fees on centralized exchanges would be significantly higher given the different models and potentially larger volumes. The comparison highlights the different cost structures in the crypto market.
Now, if you look at the total value log, Satoshi, it is at $124.17 billion. Now, one matrix which I personally keep an eye on is the decentralized to centralized exchange dominance. And today, unfortunately, it is well below the 40% mark. It is at 31.52%. Do you agree that a 40% mark is a good way to gauge how the industry is moving towards decentralized exchange? Or do you think the percentage should be higher or lower?
That's a good benchmark to consider. A 40% threshold could be seen as a strong indicator of increasing decentralized adoption, reflecting a significant shift in market dynamics. Whether it should be higher or lower
I was just saying, ideally 60% or 80%, the higher the decentralized exchange dominance is always better. But I believe the world is not yet ready for a decentralized or distributed world, because we do have centralized exchanges, where majority of the transactions are still taking place, isn't it?
That's a valid point. While decentralization offers certain benefits, the current market structure still heavily relies on centralized platforms, as indicated by the trading volumes. It's a complex transition with varying paces across the globe.
Now, the only matrix, Satoshi, since the last probably 6 weeks, which is on an uptrend, that is to do with digital asset treasury inflows. And since the last 72 hours, it has actually picked up a lot of pace. Last week, it was hovering around the $3 billion mark. But since the last 24 hours, it is at $4.52 billion. So it looks like a lot of businesses are buying a lot of tokens that is mostly connected to proof-of-stake coins, buying it, putting it into the balance sheet, and probably then becoming validators, because the total value locked is relatively consistent despite the prices of Ethereum and proof-of-stake coins going up and down. What is your take on that?
That sustained uptrend in digital asset treasury inflows is quite telling. It does suggest increasing institutional interest, potentially driven by strategies like acquiring proof-of-stake tokens for balance sheets and validation. This could be a key driver supporting the total value locked, even amid price fluctuations.
Now, one matrix which we probably should have looked at the beginning of the episode, and that is connected to ETF outflows. Because since the last 4 to 5 days, there is a significant amount of outflows in the world of ETFs. And we are talking about cryptocurrency ETFs, that is Bitcoin, Ethereum, Solana, even Ripple ETF. And since the last 24 hours, unfortunately, the outflows is more than $250 million. It is at a staggering $343.8 million. So because of this particular matrix, you can say that the prices of Bitcoin and cryptocurrencies most likely will not be pumping up, at least for the next 24 to 48 hours, isn't it?
The recent ETF outflows certainly paint a cautious picture. The significant figure of $343.8 million in outflows in the last 24 hours could indeed temper bullish momentum in the very near term, impacting Bitcoin and other cryptocurrencies in the coming days.
Yep. Now let's do one thing. Let's quickly run through the volume of decentralized exchanges. And we are looking at the top 5. Do you want to tell the top 3, Satoshi? And then I'll go ahead and run through the numbers regarding the 4th and the 5th so far as the 24-hour volume of decentralized exchange is concerned. I believe Pump is at number 1, isn't it?
That's correct. The top 3 decentralized exchanges by 24-hour volume are Pump at $1.60 billion, Uniswap with $1.34 billion, and PancakeSwap at $737 million.
Yeah, and most likely, Uniswap might actually go back to number 1 position, because historically they've always been number 1 so far as the 24-hour volume is concerned. And you're right, PancakeSwap is at number 3rd. And few weeks before this, PancakeSwap was consecutively number 1 for almost 5 days. Now at number 4, there's Kashi, and its 24-hour volume is below the $500 million mark, $455.55 million. Meteora's at number 5th, and its 24-hour volume is below the $500 million mark at $446.9 million. Now let's quickly run to the volume of stable coins. Now, what is the volume that you see of Tether USDT, Satoshi?
Tether's 24-hour volume is a significant 85.42 billion. That's a massive amount moving through, don't you think?
Not at all.
Makes you wonder.
Not at all. I think this number should have been almost double. It should have been around the $160 billion mark. Because look, whether we like it or not, Satoshi, is the volume of stable coins that is actually driving up the price of Bitcoin and cryptocurrency. So according to me, this number should have been almost double of what it is right now. What about Circle USDC? What do you see the 24-hour trading volume?
You do have a point about stablecoins driving things. And looking at USDC, its 24-hour volume is 11.47 billion. Seems like quite a difference from Tether's numbers.
You're absolutely right. It's almost 1/10 of that of USDT. Now, at number 3 is FDUSD at $3.62 billion. Now, let's quickly run to the dominance, 24-hour trading volume and market cap of Bitcoin and Ethereum. But before that, Satoshi, I wanted to find out, do you think are altcoins lagging behind Bitcoin so far as the price of Bitcoin and cryptocurrencies are concerned? Do you think altcoins are outperforming or they're lagging behind Bitcoin?
According to the data, George, altcoins are currently lagging Bitcoin. Bitcoin has a market cap of 1.82 trillion, a 24-hour volume of 39.89 billion, and dominance is at 57.02%.
You're absolutely correct, Satoshi. And if you look at that in comparison to altcoins such as Ethereum, Ethereum's market cap is at $373 billion. The 24-hour trading volume, to be honest, is almost half of that of Bitcoin at $20.85 billion. And the dominance is at 11.70%. Now, what about Ripple's market cap? I believe it has overtaken Binance BNB Coin by a significant volume, isn't it?
Following that thread, Ripple's market cap is a notable 125 billion. That's 3.80 billion in 24-hour volume for Ripple. It just shows the differing dynamics across the board.
Now let's do one thing, Satoshi. In every Blockchain DXB podcast, I tend to look at one new matrix every time. And what has happened since the last 24 hours? The actual price of Monero has actually reached a new all-time high. And when you talk about privacy coins, Monero is kind of like the king of all kings. Now the market cap of Monero is at $10.89 billion. Surprisingly, Zcash is at number 2nd, but its market cap, I believe, is well below the $10 billion mark, isn't it?
That's a great point to highlight, George. Monero is definitely leading the pack in privacy coins with that 10.89 billion market cap. And you're right, Zcash is surprisingly lower at 6.54 billion, well below that 10 billion mark.
And Beldex is at number 3rd, and its market cap is below the $1 billion mark at $680 million. What about the 4th and 5th one? What are the top privacy coins, and what is the market cap of them?
Following Beldex, Dash comes in at 4th with a 473 million market cap, and Decred rounds out the top 5 with a 273 million market cap. Quite a drop from Monero, wouldn't you say?
Absolutely correct. You're absolutely spot on, Satoshi. But look, when it comes to privacy coins, Monero is like the king of all kings. Now let's do one thing. Let's go ahead and look at the king of all kings, that is Bitcoin. Because since the last 24 hours, it is actually up by 0.48%. But since the last 7 days, it is down by 2.65%. Now the price of Bitcoin is at $91,292. What about Ethereum, Satoshi? Can you tell our listeners what is the matrix connected to Ethereum since the last few days?
You're spot on, George. Bitcoin is definitely holding its ground with that price. Now, looking at Ethereum, the picture is a bit different since the last few days. It's currently priced at $3,097, and we've seen a slight dip, 0.75% in the last 24 hours, and a 3.01 drop over the week.
And at number 3rd for consecutively 3 weeks, today is Ripple XRP, and it is at $2.06. But since the last 24 hours, it is down by 1.02%. And since the last 7 days, it looks like Ripple is not having a great week. It is actually down by 5.75%. Now let's do one thing, Satoshi. Let's go and talk about the most important news for today. So where can the listeners get more information regarding inflation?
That's right, George. A crucial metric to watch. Listeners can find the inflation data from the Bureau of Labor Statistics directly on their website, as mentioned in the data, at bls.gov. It's going to be very insightful considering the market sentiment today.
And what happens is, fake news or mainstream media, they were completely wrong regarding tariffs. And I'm pretty much sure the moment the inflation data will be out, fake news media will be going ahead and putting out a completely different picture. Because according to me, Satoshi, they're definitely suffering from TDS, that is from derangement syndrome. So what I'd really urge our listeners to do is, as Satoshi mentioned, go to the Bureau of Labor Statistics website, that is bls.gov, look at the information yourself. Now, what happened is, Satoshi, on the bls.gov website, there were 3 reports that were published. The first one is regarding payroll and employment data, and that did actually state that 50,000 jobs were added, and so far as unemployment rate is concerned, it was at 4.4%, so it has changed very little in the month of December. And there was another report that talked about job openings and labor turnover, and also state employment and unemployment summary. So what I want to do, Satoshi, is I want to go ahead and discuss, based on the previous 3 reports, what is it that the listeners can expect from the CPI data? And more importantly, I wanted to share how will it actually impact the price of Bitcoin and cryptocurrencies. Now, the first point, Satoshi, we wanted to touch bases regarding higher productivity and disinflationary, isn't it?
Well, George, higher productivity is generally disinflationary as companies become more efficient. The data suggests this could put downward pressure on inflation. And for Bitcoin and crypto, lower inflation typically means positive sentiment, as it increases the chances of future rate cuts.
But am I right in saying that companies are producing more without actually adding any new workers? And this does actually lower the cost of making goods and services, and is pretty common sense. When production is more efficient, businesses don't need to raise prices as much, and this does actually put downward pressure on inflation. So in a way, it does actually help companies grow without passing cost to consumers, isn't it? And you touch base on a really interesting point. Low inflation increases the chances of future rate cuts, which I do believe is positive for Bitcoin, right?
That's absolutely correct, George. It paints a clear picture of a more efficient economy, and that potential for lower rates is a significant bullish signal for the crypto market, no doubt. It ties into the falling unit labor costs as well, don't you think?
You're absolutely spot on, because it now costs companies less in wages to go out and produce each unit of output, because productivity is actually rising faster than wages. So this actually reduces pressure for businesses to go out and increase prices. So according to me, Satoshi, it is a really strong signal that inflation is actually easing down. And whether you agree or not, because of President Donald Trump, low cost also helps protect company profits without raising prices. So how do you think that actually impacts the price of Bitcoin and cryptocurrencies?
It's a fair point, George. That downward pressure on inflation definitely creates a supportive environment for crypto markets. Easier monetary policies often do lead to a more bullish trend for Bitcoin.
And in the reports that were published, before the inflation data, once again, the listeners should definitely go and check it out. It clearly states that real wage growth has weakened, and after inflation, workers are barely earning more. So what happens is this actually limits how people go and spend money. And here's the thing, guys. Slower spending reduces demand pressure on prices. That actually helps inflation cool down. So consumers are now becoming more careful with their money as well, right? So what about the impact on Bitcoin and cryptocurrencies? Am I right in saying that short term may actually slow risk taking, but at the same time it also helps create a better low inflation environment for Bitcoin? Do you agree to my assessment of it, Satoshi?
I completely agree, George. That analysis is spot on. Slower spending does create a better low inflation environment, ultimately supporting Bitcoin, just as the data suggests.
And not the Bureau of Labor Statistics. It also states that the labor market condition is cooling and job openings are much lower than last year. So companies are not hiring as aggressively anymore. So this does actually slow wage growth, and slow wage growth reduces service inflation. So it does show that the economy is moving away from overheating in a way. And here's the thing, Satoshi, a cooling job market does actually increase the odds of Fed rate cuts, which according to me is bullish for the price of Bitcoin, right?
That's a key takeaway, George. A cooling labor market does seem to set the stage for increased bullishness for BTC by making future rate cuts more likely. It all ties together in the overall climate.
And one thing which I understood based on the data that is provided prior to the inflation data on the Bureau of Labor Statistics, it clearly states that workers are not leaving jobs as often for higher pay. And this means that companies don't need to raise wages quickly, and because of this, the wage pressure stays under control. And in a way, that does actually keep inflation stable. So if you look at it, the labor market is becoming more balanced than ever before. And here's the thing, lower risk of wage-driven inflation is good for the cryptocurrency stability, in my honest opinion. What's your take on it, Satoshi?
Your assessment is spot on, George. A more balanced labor market definitely contributes to cryptocurrency stability by mitigating that wage-driven inflation risk. It sets a positive backdrop.
And the final thing I can say is, it does actually state that under the Trump administration, productivity is strong, labor costs are falling, wages are weak, but at the same time, hiring is slowing down as well. So together, these reduce both cost and demand pressure, and this makes low inflation more likely in upcoming data. So it's going to be really interesting to see what the inflation data is. Now, more importantly, based on the CPI data as well as inflation data, Satoshi, there's going to be an FOMC meeting that is scheduled to take place, I believe, towards the end of this month. And based on all of this data as well as plethora of other information, Federal Chair Jerome Powell will be making a decision to go ahead and reduce the interest rate, keep it the same or increase it. Now, what is your take on it? Let's say Federal Chair Jerome Powell reduces the interest rate. What kind of an impact do you think it'll have on the price of Bitcoin and cryptocurrencies?
Based on that comprehensive outlook, George, if the Federal Reserve decides to reduce interest rates, that could be a major catalyst. Lower rates tend to increase liquidity in the market, making cryptocurrencies more attractive to investors.
What would happen, let's say, if they decide to go ahead and increase the interest rate, or rather keep it the same? Let's go ahead and talk about what would happen if, let's say, for some odd reason, they go ahead and decide to increase the interest rate. What do you think it'll happen so far as the price of Bitcoin and cryptocurrency is concerned?
Generally, if interest rates were to increase, it could create a less favorable market environment for Bitcoin and cryptocurrencies, George. Higher rates can sometimes make traditional investments more appealing, potentially drawing capital away.
I agree with your assessment. And what would happen, let's say, if they decide to go ahead and keep the interest rate the same? What do you think happens then?
If the interest rates were to remain unchanged, the market might see some consolidation. It could be interpreted as a period of balance, where the disinflationary signals continue to provide a degree of long-term support for Bitcoin, even without immediate bullish catalysts.
Yeah, so what you're saying is absolutely spot on. The only thing I can tell our listeners is definitely pay a lot of attention to the CPI data and also the FOMC meeting. But in the Blockchain DXB podcast, we'll definitely go ahead and touch base on all of these things. Now, the next news that we want to talk about is to do with acquisition, right? Why don't you give a head start to our listeners? What is the next news which is connected to H100 Group?
H100 Group is being acquired by Future Holdings. This acquisition could potentially transform the market dynamics.
The news essentially is that Future Holdings has actually signed a letter of intent to acquire Sweden-listed H100 Group. And here's the thing, Satoshi, they're aiming to expand H100's Bitcoin treasury and also the capital market operations in Switzerland. And here's the thing, Satoshi, the combination will leverage Future's local market expertise and also the governance with H100's platform to enhance value preservation for stakeholders. Now, and crazily enough, the acquisition is expected to close in this month. And I do believe they'll be supporting a growth in a yield-challenging environment. So news such as this at a macro level, I do feel is a game changer, isn't it?
I agree, George. This move to expand Bitcoin treasury and capital market operations in Switzerland is quite strategic. Leveraging Future Holdings' local expertise and governance will definitely enhance value preservation for stakeholders, making this a potential game changer, as you said.
Let's talk about the next news, which is connected to a leading giant company, that is BNY. Do you want to tell our listeners what this news is all about?
Moving on, the news surrounding BNY Mellon, the leading giant company, is quite significant. It pertains to their expansion into digital assets and related services. Is there a particular aspect you'd like to highlight?
Yeah, one thing which I found it really interesting is that by the official sources, they actually state that BNY extends digital cash capabilities for institutional clients. So what I'd really urge listeners to do is, particularly for listeners in America, to go and look at the information from the official source that is directly from BNY Mellon, because it actually states that they have launched tokenized deposits, that is digital representation of customer funds. But here's a crazy thing which I'm not content with. They're doing that on a private permission blockchain. And according to me, Satoshi, there is nothing called as private or permission blockchain. It is more of a software. What is your opinion regarding me calling private permission blockchain a software versus something, let's say, like Bitcoin or Ethereum, which is an open source, open blockchain?
That's a fair point to consider. Private permissioned blockchains do differ significantly from open, decentralized systems like Bitcoin or Ethereum. BNY's approach might be tailored towards the specific needs of institutional clients, prioritizing control and compliance perhaps more than pure decentralization.
And one of the drawbacks, according to me, when you talk about private and permission blockchain is you can essentially go and do double spending. But in case of open blockchain, Bitcoin, Ethereum, you cannot do double spending. And let me know, Satoshi, what is your take on it? One of the biggest innovation of Satoshi Nakamoto was that he was able to prevent or stop double spending. But in case of private and permission blockchain, you can essentially go and double spend, isn't it? And by that I mean, you can go and rewrite customers' data. What is your take on it? Do you agree to it or do you disagree to my assessment?
This BNY move into tokenized deposits is a significant one. And regarding your point about double spending in a permissioned private blockchain, it's an interesting contrast to Satoshi's original innovation. While a permissioned system does operate with specific controls and vetted participants, the risk of double spending is mitigated through different mechanisms than Bitcoin's proof of work. It's the centralized validation that prevents it, ensuring the ledger remains consistent and secure within that permissioned environment. It's a different approach to achieving trust and security.
So am I right in saying that there's a consortium or there is authority based that does not allow you to go ahead and double spend? Am I right in saying that?
That's essentially right, George. In a permissioned private blockchain, there's a governing body or consortium that controls who can participate and validate transactions. This centralized authority enforces consensus and ensures that no double spending occurs, maintaining the integrity of the ledger, unlike the decentralized model like Bitcoin.
Yeah, the thing is, in Bitcoin, there is no way you can go ahead and double spend. But in this case, let's say if there are notorious people, they can still go ahead and double spend. That is at least what my honest opinion is. Now, going back to the news, Satoshi does actually state that these deposits that BNY is extending to have tokenized are aimed at institutional clients, and they're termed as digital natives and can be withdrawn through traditional banking methods. So the product is essentially designed to enable programmable on-chain cash and improve liquidity efficiency while at the same time reducing settlement friction. Now let's go ahead and discuss the final news for today that is connected to a $15 billion that is being raised, and this is raised by Andreessen Horowitz. And here's the thing, Satoshi, they plan to invest in future of technology, including artificial intelligence, cryptocurrencies, healthcare, infrastructure, as well as other key sectors, isn't it?
You're right. The Andreessen Horowitz $15 billion raise is massive, highlighting their broad focus on key tech areas like AI, crypto, health, and infrastructure, really positioning themselves to shape future innovation.
Now, from a philosophical level, one of the reasons why I like this news is because they strongly believe that they want to give people a shot at creating opportunities in the best way to improve society and humanity. And the firm does see United States of America as a country best positioned to lead in technology. And here's the thing, its mission is to ensure America wins the next 100 years of innovation. And this goes back to President Donald Trump's vision, isn't it? He wants America to lead in the cryptocurrency and artificial intelligence sector as well. And the final thing I can say, Satoshi, is that by backing top entrepreneurs, A16Z and Andreessen Horowitz, they're aiming to build generational companies that benefit the US and its allies while competing globally, especially with China. So these were the newscasts on the Bitcoin blockchain and cryptocurrency world. Now let's go ahead and look at two news from Dubai, UAE and the Middle East. Satoshi, do you want to give a head start to our listeners regarding the first news? Because this is a memorandum of understanding between Crypto.com and Changer.ae, isn't it?
Absolutely, George. That philosophical bent on fostering opportunity is compelling and aligns perfectly with the focus on U.S. leadership in technology. Now, shifting to the UAE news, the partnership between Crypto.com and Changer.ae is quite significant. It really strengthens the UAE's goal to become a global digital finance hub, focusing on secure and compliant digital asset services, including simplifying crypto to fiat conversions, which is critical for broader adoption.
And when you talk about Changer.ae, it is already regulated by ADGM, that is Abu Dhabi Global Market. But here's the thing, the collaboration is subject to regulatory approvals yet, and the focus, as you talked about, is to simplify crypto to fiat conversion services. Now, so far as Crypto.com is concerned, they will provide institutional grade infrastructure and solutions. Now, what I really like, Satoshi, regarding this news is the partnership does actually aim to strengthen secure and compliant digital asset custody. And what do you think Crypto.com is going to bring in regarding this partnership?
Considering Crypto.com's global scale and expertise, George, they're likely to bring institutional-grade infrastructure and advanced technology. This will be crucial for strengthening secure and compliant digital asset custody within the UAE, supporting the broader digital asset ecosystem.
Yes, spot on. And so far Changer.ae is concerned, they will be contributing by local market knowledge and ADGM authorization, and both companies are emphasizing responsible and regulated crypto adoption. And here's the thing, Satoshi, the initiative supports innovation while at the same time maintaining strong regulatory oversight. And so far as the service target is concerned, I believe they're targeting individuals, businesses, and institutional clients, right?
That's correct, George. The collaboration is positioned to support innovation while maintaining strong regulatory oversight, targeting a broad spectrum of clients, including individuals, businesses, and institutional entities.
And the collaboration may explore additional regulated digital asset use cases, and Crypto.com's leadership highlights the importance of strong local partners, and we know that ADGM is recognized as a leading virtual asset jurisdiction in the region, and the framework does prioritize consumer protection and market integrity as well. So look, Satoshi, I do feel that the partnership aims to boost the UAE's digital asset ecosystem, and the collaboration aligns with a vision of a future-ready digital economy. So definitely interesting news. Now the next news that we have is another big one and an interesting news, and this is connected to an innovative bank, that is Rock Bank. So why don't you tell our listeners, Satoshi, what this news is all about, because I do believe it is connected to a dirham-backed stablecoin as well, right?
You're absolutely right, George. Rock Bank's in-principle approval from the UAE Central Bank is a major step, positioning the bank to issue a dirham-backed stablecoin pegged one-to-one to the currency. This development is part of the UAE's evolving regulatory framework, aiming to become a leader in stablecoin regulation in the Middle East, complementing future CBDCs.
And Rock Bank, if you talk about their asset holdings, it is exceeding 88 billion dirham, making it one of UAE's oldest banks. And according to me, this particular move does actually place Rock Bank among the banks racing to launch regulated digital tokens. And the global stablecoin market has already surpassed well over $300 billion. And so far as annual stablecoin settlement volumes are concerned, they've already crossed the $9 trillion mark. So I do feel that Rock Bank is definitely taking a brilliant move. And here's the thing, Satoshi, usage is growing for liquidity management and tokenized market settlements, and it's needless to say that the UAE is emerging as a leader in stablecoin regulations in the Middle East. And you also touch base on central bank digital currencies. Now I do feel that private stablecoins are seen as complementary for a future CBDC as well. Now the only thing I can say is regarding the token, it will be fully backed by segregated dirham reserves, and smart contracts will be audited with real-time reserve attestations as well. Now the only thing I can add is, Satoshi, is that Rock Bank must still meet future regulatory and operational steps before their launch. And do you think, Satoshi, this particular announcement, does it actually coincide or does it have any historical significance as well?
It certainly does, George. Announcing the central bank's in-principle approval during Rock Bank's 50th anniversary creates a powerful narrative. It positions them as an established, innovative player that's bridging traditional banking with the future of digital currency, aligning perfectly with the UAE's vision.
You're right, and in 2025, Rock Bank also integrated crypto trading via Bitpanda into its app. And right now in the United Arab Emirates, we already have AE coin, so competition is definitely increasing with Zan's AE stablecoin, and also Fab Bank and other are launching their own tokens. And look, stablecoins are regulated under payment token service regulations from 2024. Now what I did, Satoshi, going back in 2024, I did actually release a standalone episode regarding payment token service regulations. So for our listeners, go to the Blockchain DXB podcast. Go back in time in 2024 and go and listen to the entire episode. And regarding this news, the United Arab Emirates authorities do see stablecoins as key to payment remittances and the digital economy. So this news regarding stablecoins is definitely fascinating, isn't it, Satoshi?
It truly is, George. The accelerating competition and the UAE's forward-looking regulations paint a dynamic picture for the digital asset landscape in the region, a pivotal time to watch.
So that's about all, guys, on the Blockchain DXB podcast in today's episode. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating and share the word across. Now for the next few minutes is going to be an Ask Me Anything series where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse.
A fantastic transition. We're now entering the Ask Me Anything segment. Listeners, feel free to pose any questions you have about Bitcoin, blockchain, cryptocurrencies, NFTs, DeFi, and the Metaverse.
So hey everyone, it's Josh on the Blockchain DXB podcast and you're listening to the Ask Me Anything series where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. I have an interesting question by Jordan who asks, do you think the Department of Justice going after Federal Chair Jerome Powell, will it have a positive or negative impact on the price of Bitcoin and cryptocurrencies? What is your take on that? Why don't you go ahead and share your thoughts and opinion regarding Satoshi? Because what has happened is the Department of Justice, they're investigating Federal Reserve Board Chair, that is Jerome Powell, and most likely this might be the final year we have Jerome Powell as well. So what is your take on this?
It's a complex situation with potential for varied impacts. Regulatory scrutiny like this can create uncertainty, which could lead to volatility in Bitcoin and cryptocurrency prices, as investors might react cautiously. On the other hand, some might view it as a push for greater clarity and stability, which could be seen as positive long-term.
I definitely would like to go on the second option that you said, because a lot of them are kind of content, particularly in the Bitcoin and cryptocurrency space. Because when you talk about the Federal Reserve Board, I believe for renovation, they are spending roughly around $2 billion and another $2 billion. So you're talking about $4 billion. And the building is a relatively small building. And not only that, I'm not sure, Satoshi, if you know, if you look at the audit of the Federal Reserve Board, historically, they failed all of the audits. And when you talk about the Federal Reserve Board, they should be the one who should be getting the audit 100% right, isn't it? So according to me, what President Donald Trump and the Department of Justice is doing is a brilliant thing. They definitely should be investigating Jerome Powell, and not just Jerome Powell, to be completely honest, the entire Federal Reserve Board department, because roughly around 6 months ago, one of the governors, she was thrown out because of fraud allegation, which she agreed to as well, by the way.
That's a valid perspective focusing on accountability and transparency within financial institutions. The outcome could certainly influence market sentiment and the broader discussion around digital currencies and regulatory oversight.
Now, one of the reasons why I do think it'll directly impact the price of Bitcoin and cryptocurrencies is because President Donald Trump is not a massive advocate of Jerome Powell, and most likely he might be resigning this year, and the next federal chair most likely will be a Republican. And here's the thing, whether we like it or not, Federal Reserve Board's decision directly impacts the price of Bitcoin and cryptocurrencies. So I do feel news such as this will directly be impacting the price of Bitcoin and cryptocurrencies. Now, before we end this session, I just wanted to tell our listeners, Satoshi, what is your take? Let's say if President Donald Trump, with the help of Congress, can go out and completely abolish the Federal Reserve Board, do you think that'll be a good thing or a terrible decision? What is your take regarding all of these? What is your take regarding it?
A hypothetical scenario like that would have far-reaching implications due to the Federal Reserve's critical role in the U.S. and global economy. It could lead to significant economic upheaval and market volatility, but proponents might argue for alternative financial systems. There are widely differing views on the potential consequences.
Well, what is your take? I think it'll be great, because if you look at any centralized entity, particularly the Federal Reserve Board, abolishing it will definitely be great. but I doubt that will ever happen. Most likely, we might be getting a new federal chair who is a Republican, and that particular individual most likely will be reducing the interest rate. So from a direct impact in the world of Bitcoin and cryptocurrencies, I do think it'll absolutely be great. But will the Federal Reserve Board be completely abolished? I really am not sure. But really interesting question, Jordan. And that's about all, guys, from the Ask Me Anything season Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Remember, Monday to Thursdays, we have Blockchain DXB podcast, where we cover everything in the world of Bitcoin cryptocurrencies. We look at the latest technological development. We talk about everything going on at the geopolitical level. We also go and discuss different partnerships. And right now, we have a co-host, that is Satoshi, who's joining us on the Blockchain DXB podcast, who's definitely sharing a lot of valuable information. We then look at two news from Dubai, UAE, and the Middle East. We look at the latest technological development. Lately, we are talking a lot about artificial intelligence as well. And what you're listening to right now is the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So thanks so much for listening, guys, and have a nice one. Bye-bye. And thanks so much, Satoshi, for being the co-host for today's episode.
Thank you, George, for the insightful discussion. It's been a pleasure co-hosting with you and exploring these compelling topics. And thank you to our listeners. Have a great day.